Hello friends. Welcome everyone to Intrazon, India's largest retail intraday traders online conference. I am Fazil Ahmad, the director of Traders Gurukul. I'm heading the vertical called Education and also the host for today's program. It's a great pleasure to invite every one of you to the third edition of this intraday webinar series. I'm sure by the end of this program, you will have a lot of knowledge which can help you to make better decisions in your trading life. Let me also like to thank our media partner Money Control Pro, which is the largest financial portal in India with millions of daily readership on their website. They helped us to reach a wider audience in a shorter span of time. Let us also thank and appreciate our title sponsor, Espresso, from the family of Sherhan, one of the leading stockbrokers in India with millions of investors as their customer. The speaker for today is my friend Shijumon Antony. He's an index options trader. He's into the market for last 11 years and trading only in Bank Nifty weekly options for last 6 years. He's a completely discretionary trader, but have a clear guidelines on the macros and the micro things that impacts on the market moves. He focuses more on the trading psychology and trading skills rather than on the indicators and analysis. I would say he is a proper price action trader. The speaker session for today is importance of trading skill. He will be sharing on the topic of importance of trading skills. On behalf, Mr. Shiju, on behalf of Traders Gurukul, Money Control Pro, Espresso, I extend my warm welcome into our program as an elite speaker. The stage is yours. Go ahead, Shiju.
Thank you, Faisal. Good evening, everyone. So today my session will be on importance of trading skill. So before just to introduce myself, uh, are you able to hear me, Faisal? I'm all right, right?
Yes, Shiju, you are perfect.
Okay.
Please
Okay.
carry on.
Thank you. So I will just introduce myself because before getting into the session, you should be knowing who I am and what I do. So I am a discretionary trader. I trade in Bank Nifty or even Fin Nifty also I started doing it in, and it is purely on options I trade. So last 6 years, it's only Bank Nifty or Fin Nifty weekly options, and for the last 11 years, I've been trading in derivatives. So before moving into the Bank Nifty, I was trading Nifty monthly options and Nifty futures and some of the some of the stocks futures and options. But since NSC introduced Bank Nifty weekly options in 2016, I started doing that, and I found it to be very much suitable for my kind of trading, and I've been doing that for so many years now. I'm a completely discretionary trader. That doesn't mean that I don't have any rules or guidelines. I do have the clear rules and guidelines. And based on the rules and guidelines, I take the entry and exit. And mostly I focus on the trading psychology and trading skills rather than the indicators and analysis. So I do use a plain candlestick chart without any indicators or any drawings or lines or anything, because I've been trying different strategies and different indicators over a period of long time, but finally I found that it is very helpful to look at the price action and trade rather than looking at a lot of indicators and hiding the means masking the price action and charts using so much of lines and drawings. And for the last 3 to 4 years, I've been last 4 years, I think 2018 onwards, I've been generating consistently unconventionally high returns. So that's about me, and I will just explain what we are going to talk today, and what are the major takeaway you will be getting on this session. So mostly I'll be talking about thumb rules of trading and the ways to incorporate them practically. So there are a lot of people talking about the basic rules of trading using so many jargons, but hardly anyone incorporate these things into the trading. For example, people talk about the risk reward ratio using, I'm focusing on RR and all, but most people don't know how to incorporate that into the trading, and how do we ensure that our trading or our setup has a proper risk reward. So that is one thing I'll be talking about. And there are a lot of other basic things about the trading I'll be talking, because what I found by interacting with many traders in the last few months is that many are missing this basics in the trading. So they learn about the market, they learn about the options, and mostly they start trading or they start selling options, and they don't look at the internals of the market. They don't look at the trading psychology or trading skills or the basic understanding of the trading skills. It is missing with most of the traders. So I thought, okay, it would be helpful if I talk about that rather than talking about any strategies, because I don't use any specific strategy which I can talk. But what I can do is whatever I'm sharing here, that would help most people to improvise their own strategy. If somebody has a strategy which is working or not working, applying the things that I share here, you'll be able to improve your own strategies and trading setup. So I think I can move on to the slides. Fasil, is there any Q&A or anything, or we can keep moving on, right?
No, you keep moving. At the end, we will have a Q&A.
Okay, thank you. Okay, so I will start the session by talking about the most or the biggest problem of most of the traders. So over trading. So many people are facing the issue of over trading, and many people I've seen, they consistently make money, and in couple of trades they blow up everything because of the over trading, right? So that is a very common issue, especially with the discretionary traders and intraday traders, because intraday trading is not a joke. You have to sit in front of the system, and you have to focus on the system and the market very closely. Intense focus is required throughout the day. And when you sit in front of the system and watch the market, if there is no trade comes in, the proper setup is not coming in, still people go out and take the trade without having the proper setup. So that eventually goes into the over trading, and some of the setup, when people get it, they think that okay, this is going to be the holy grail, this trade is going to be a killer winner, and they go all in because they don't want to miss out the opportunity. But they don't realize the fact that anything can happen in the market anytime. Let it be the most perfect setup you have ever seen, even in that kind of setup, the market can go opposite way anytime. Let the market moves grinding up every tick throughout the day, maybe 4 hours or 5 hours, and any second, any minute, the market can reverse. And the market, which is like so much of fluctuating and so much of consolidating market, which can start trending anytime. A trending market can go to sideways market anytime. So anything can happen in the market anytime. So there is nothing that we can underestimate about the market. We have seen all of that in the last, especially in the last 2 3 years, we have seen that. But back in the mind, we still don't realize. I have seen people saying, mark my words, this is going to happen. Nifty is going to touch this particular level and it is going to reverse. Or the market is not going there. It is not going to fall, or it is not going to hit all-time high, or it is not going to hit break days high or whatever. People so confidently, so adamantly, so arrogantly, people say this is what it is. I know the market. The market is going to be like this. So that kind of extreme conviction or extreme thought process is behind the overtrading, because I don't want to miss out the opportunity. If I believe that the market is not going to some level or it is going to break down, I can definitely bet everything in, right? So that's what many people do in overtrading. And when you are in a trade, always remember anything can happen at any time. That is the reason position sizing, stop loss, or risk management is the key in trading. So if you always know that anything can happen in the market anytime, you always will have the proper risk control mechanism. So I can see that many people are selling options right, left, and center. They use every single penny as a margin, and they sell call, they sell put. They believe that okay, market will be in this range and it will not go beyond that and all. But all of a sudden, anything can happen. I'll give you an example. In I think 2016 or something. I don't exactly remember the year. There is one day I was actually holding some put option, and it was into a losing side. Market was rallying. Then finally, I booked the loss at some 2 rupees or something. It completely gone. I was like losing trader during that time. It was so many years back, a few many years back, and Suddenly there's a news came in about the surgical strike or something, and the market started falling immediately. The option that I booked lost at 2 rupees or something, that went to like 400, 500 rupees. So those kind of things can happen in the market. Imagine the people who had sold extreme amount of options during that day. So always keep in mind, anything can happen in the market anytime. This is very basics. I just want to touch based on this before moving into the session. So I'm an intraday trader. So I have a lot of intraday trading best practices, and I am a discretionary trader. I have a lot of discretionary trading best practices. So I'll first talk about the intraday trading best practices. So you all know the market usually have move means market usually are moving in a uh, specified range. It is not exactly the same range every day, but almost in a certain range. So currently, if you look at the VIX is under 15, and Bank Nifty, if you look at for the last many days, it's moving around 150 or even 200, 250 range. It's not even moving more than 300 points in any day for the last many days. But earlier, maybe a couple of weeks before or a month ago, if you look at the market was moving real big. And maybe a couple of months ago, the Bank Nifty was moving like thousands of points every day. 800, 1000 or 1200 points. Almost every single day it was moving into that range, right? So that is uh, the kind of market we are in. So market doesn't give the similar move every day, but uh, when the market enter into a range zone, it actually gives almost similar kind of move in a series of days. For the last many days, if you look at market is moving around 300 points Bank Nifty, and that is what we need to. That's why we need to consider the ATR. ATR means average true range. So this is an indicator which you can refer. It is not giving you any entry or exit or anything. It is not good for devising any algos or any system based strategies, but this is real good for understanding the market internals. So you can go back to the means, you can go to the trading view chart, and probably you can see the ATR. What is the ATR? So you'll get a fair idea as to what is the range in which the market is moving. For example, I will show you that in my trading view. So this is the Bank Nifty chart. So usually I check the ATR mostly on the daily chart, because I'm mostly concerned about the day range. So if you go to the indicator, and you can search and find out, I just added into the uh, favorites. So it is coming here. See the way the range is dropping. So start of the October, if you can see the range here, the left hand side, the 14, this is the 14 days average true range. During that time, 800 point was the average true range, and maybe I think that is the highest we have seen in the recent times. It doesn't mean it will move only 800. When the ATR is 800, certain days it can move 1200, certain days 600. So it's a combination of, or the average of many days. But if you look at here, last many days, the market has been in a very tight range. The ATR is dropping drastically. And if you look at here, it is 461 points. That is the current ATR. It is currently 461 because it is taking the 14 days average. And if this trend continues, the range will further contract. So this is the reason the premium is so low. And the significance of ATR is, when the market is already moved one side approximately to the ATR range, it is always better to avoid trading there. For example, market is 442,457. So ATR is about 461. So if the market is coming somewhere closer to 42,000, which is somewhere approximately ATR range, it is better not to short the market there, because only on rare occasions, it is not that market cannot move beyond ATR. It moves. It can move any day, but it is not that common. Your probability will be less if you play for a move beyond the ATR range. But when the market has moved almost the ATR range, and if it is showing the signs of reversal, then it is good for taking a reversal trade. So always keep that ATR, average true range, in mind, and understand that beyond ATR market doesn't move very often. And always remember, It doesn't mean that market cannot move beyond ATR. It moves, but on an average, it moves approximately onto the ATR. Okay, so the significance I have mentioned some more details here. Many times market gives false breakout or breakdown near the ATR. So unfortunately, this is the point where many traders book the loss on the wrong trades, and this is the same point most of the many of the traders take the breakout or breakdown trades and finds the market immediately reverses from that point. So many times, you must have noticed many people would be going and taking a trade right on the breakdown. You take the trade, immediately market reverses opposite to you, or you see the breakout market moves up and it breaks the resistance and it moves it has been going really good, great, and it suddenly gives a breakout point and you enter the trade and the market starts reversing. So usually that will be approximately the ATR point, ATR area, not the point. It is approximately in that area. And another thing is uh, regarding the support and resistance, not just about the ATR. In case if you see the support and resistance breaking, for as an intraday trader, it is always better to